A wedge is a channel where the lower trend line is there, but within the upward sloping channel or downward sloping channel, there's also a second trend line, okay? So somewhere inside the channel, market prices start to take whatever asset you're looking at parabolic in one direction. And what I mean by that is there starts to emerge a more aggressive trend inside the trend that you're already looking at, okay? So if I gave you a 2 or 3 line definition of what a wedge is, wedges are trading channels either sloping upwards or downwards, but with one small difference from traditional channels, and the key difference that makes them a wedge, either their upper trend line or lower trend line is converging with the opposite line within the channel. But that's the definition of it. You want a trend channel in one direction or the other, and within that channel, you want a second trend line that is going in the same direction of the trend, but at a steeper angle. Essentially, when you talk about the different kinds of wedges, you've either got rising wedges or falling wedges. It's obvious that within that context, it's either a bullish trend or a bearish trend. You have to have the trend in the first place. I'm going to put up the screen now. So I've cut out the recent price action of Tesla by moving the chart to the right, as you just saw me do, okay? The red line here is a trend channel, okay? And this one's off, the bottom one's off a little bit. It should be more to here, but that's okay for the purposes of what we're doing. And then within this upward sloping trend channel that Tesla has been in since April of this year, right? I was able to draw this second white trend line here. Here's my initiating point. Here's my defining point. Okay, these two right next to each other. You guys, if you were in the traditional trend line seminar, and then you were in the trading trend line seminar, you'll know why I put this one in with 2 points right next to each other, because that's a trade trend line. And if you guys missed that, when the recordings are ready, you should watch that. But I've got an upward sloping channel here, right? And within that channel, I've got a steeper trend line as Tesla went parabolic. This upper trend line and this steep trend line form a wedge, okay? And it's an upward sloping wedge. So what is an upward sloping wedge from a trading perspective? Well, it's a potential for a short trade within an upward moving asset. Okay, so Tesla in this particular period of time, again, from this April low on, is basically bullish, right? Rallied up here, congestion here, started to rally up back again here, breaking out of this sort of horizontal area of congestion, and it went into a bullish move. So here we have the upward sloping line, right? Let me get rid of this. So these two light blue lines are our channel. And within that upward sloping channel, we had a parabolic move in Tesla, where you can see here, it was something in the range of up 10 of 11 sessions right in here, right? Something like that. Don't quote me on the number. So I was able to draw another trend line within that channel. This top blue and this bottom white form a wedge, and you can see it, right? If you think about a wedge as being sort of an old school doorstop, right? Where you put it in the door, then the door won't automatically close or automatically open, right? You put a wedge it down there. So what happens? Well, this is a short-term, potentially short-term bearish signal within a longer-term bullish chart. Now, what we look for to trade these is a breakdown, because what the breakdown gives us is a very clear target. Now, when we got the breakout of this wedge, do you see where it went? Right down to the lower channel trend line, okay? That's what makes wedges so easy to trade, okay? They're one of my favorite patterns to trade, because when you get a breakdown through the interior trend line that forms the wedge in the first place, you have a natural target, and it's the bottom of the trend channel that the stock or the asset was already in. That's why these are useful. Now, I want to be able to show you a downward sloping one, but I can't find one because there's been so many bullish trades lately. right? And I promise you guys in the next session, I'll start the session with a downward sloping one. But unfortunately, I started preparing for this too late in order to find you a downward sloping one. We probably had one here, but in this particular area right here. But when you look at this, when I move in and I put the current price action in there, it becomes very clear. When you get a breakdown here, your target is the bottom of the trend channel or another target area, which in this case could be the 50 EMA, which I have here in green, right? So that's what we're talking about with wedges. Downward sloping channels with a sharp downward sloping trend line in the midst of the downward sloping channel works the same way. It's a bullish pattern within a bearish trend. A bullish pattern within a bearish trend if you have the opposite going on. So that's what wedges do. Microsoft, we have this up channel right here, right? And you could see that we came down to the channel. Well, within this up channel, you were able to draw two other upward sloping trend lines. One was here. We had the high here. I had the lower trend line from 1 and 2. But then as we went up to here, I noticed that this high matched with this high on a parallel line with this lower one. So I was able to draw this in place and actually get my channel, right? So I got it right here. All right, so you see this sort of peach or orange one? This forms my wedge, okay? I have the upper channel trend line and I have this peach line, and you could see again the shape of a computer mouse, the shape of a doorstop. That's a wedge. People will say to me, well, what's the difference between a wedge and a triangle? Well, that's very easy. Well, first of all, let me point out that once we closed below, which was actually right here, you went down to the original channel trend line, and that's where you got the reaction back up. So you get this close here, this little one right here, which is hard to see, right there, actually closed below the wedge channel trend line. Now notice, you get this move down. The first candle actually stops at this other trend line that we drew and rallies back up a little bit on the open, and then we get back down to here and we get to this trend line. This is still, okay, this particular Microsoft is still in an up channel, but you were able to get a very successful short trade in the midst of there. That's what wedges allow you to do. Now, if we break this channel, well, now we're possibly in a trend change. So here's your channel, the white. Here's one wedge in the yellow, but then it got broken today. And then the sharper wedge is here. So what's happening with wedges is you're getting higher highs and higher lows, but it's compressing. Okay, it's getting into smaller and smaller ranges. And you're going to get a breakout in one direction or the other. Now, if you get in a breakout up, there is a target for the upside as well. Now, if we would have broken out up, right, instead of down, if we would have broken out up through this upper trend line instead of down, your target becomes in here now, the upper trend line of this wedge. And then your stop trails below the lower one, okay? You just have a trailing stop below it the whole time. Every time it moves higher, you trail up. And this works in the other direction as well. Here we have the QQQs. We have this upward sloping channel that the Qs have been trading in, right? And in the midst of that, we're able to draw this wedge channel line. And then we get a close below it, and it goes down to a new area here. Now you might say, well, Bob, what did you draw this channel over? Well, it is true that this channel was here first. It was definitely here first. And when we got this breakout up, we got a little bit of a retest and a rally, but then we broke back into the channel, right? So if I would have taken and drawn a parallel line with this lower channel here, you'll notice that this particular channel was the target when the wedge broke out up instead of down. See how when we broke out of the original channel, we got to this one here. So now we have a new channel that's slightly steeper. So that means I can, and that again is a wedge trade. So that means I can get rid of this longer channel. And we now have a wedge inside this more recent channel, which is this thick white line right here. We broke that wedge and we got down to the lower channel trend line. That's what wedges do. Now, normally it's a much higher probability trade if the range is tighter than this. In other words, if the NASDAQ continued to trade in here until the wedge got really, really tiny, it becomes a much higher probability trade. Because when you're entering a trade like with this close, your target is here, your stop is above the recent high of the channel. All right, so your risk reward is off, which is why I said I didn't short this one, right? Notice that I did not short. I said that. I said I did not short this particular move, and I'm not going to short this particular move. Now, I know I'm throwing a bunch of stuff in, but going back to what I said last week about rotation zones, here's my 2 moving averages for the rotation zone, right? I've got the red, which is the 8 exponential, and I've got the blue, which is the 21 exponential. They have crossed down. That is not a sell signal for me. If you remember what I said about the rotation zone, right, is I needed to start angling down, which it has done here, and widening out, which it hasn't quite done yet. Okay, they're still pretty tight. It continues to angle down and widen, and then the NASDAQ trades up into it. I will draw my best fit trend line, and I will short a break of that trend line. So think about it like this. On the way up, here was a cross up, right? Right there. Rotation zone is just forming. But then it started to widen out and go on a sharp angle. So what do? I draw a best fit trend line when it goes into the rotation zone here. And again, I'm just kind of trying to draw a general trend line, all right? Not something so specific. And then I got to close above it right here with a green candle. And that close is my long signal, which I then ride up to here, go back into the rotation zone. Am I stopped out here? No, but that's not important. Let's say you did take profits. Let's imagine that you took profits or you missed this trade. All right, take the same tool, best fit trend line, close above it, you get long, rally. Okay, that's 2 consecutive rotation zone long entries in the QQQs. All right, now, why am I not selling it? Notice here, I got a cross lower, right? The rotation zone started to widen out, okay? And it started to angle down. So what do? I draw my best fit trend line right about here. Now, did I get a red candle close below that CrossFit trend, that best fit trend line? I did not. Now, some of you may be looking at this. Well, at this point, because I had a rotation here, I have to redraw this best fit trend line. So it looks kind of like that. And then as I get over here, my rotation zone is now flat. It's not angled anymore. So that means I don't have a rotation zone. So that means there was no short trade after this cross for me. And it's the same reason why I'm not selling it here, because it's possible that the NASDAQ could move back up. As a matter of fact, this is what I think is going to happen, but not on a technical basis, more on a, I look at the fundamentals and I think the Fed's probably going to cut probably at least 2 times now because of the stock sell-off. And I think that they're probably going to be driven by that. So I think the NASDAQ's probably going to rally back up in here and my rotation zone is going to flatten out. And once it flattens out, I don't have a trade anymore. So that's wedges, and that is a recap of rotation zones. So wedges, once you start seeing the wedges, guys, you can't unsee them anymore. You'll see them everywhere, and you'll see how reliable of a pattern wedges are. And I think that's one of the most critical things that you should take away when you start to line up wedges and you start to see them, because you'll draw a lot of channels, upward sloping and downward sloping, and you'll see these moves that are parabolic within the channel, and you could right away think this might be a wedge. And the wedges are very, very, very reliable.